Good afternoon and welcome, folks. This is India Market Close here on NDTV Profit. I'm Harsh Saita. Let's look at how markets are doing, and the Nifty has seen a bit of a cool off from the day's highs. We are up 100 points nonetheless. We are holding 25k, so those are the positives. The Nifty Bank outperforming as well. You can see that on your screen. Let's look at it intraday as well, and we'll see that minor cool off because in the morning we were of course doing very well. In fact, we clocked the day's high somewhere at midday, and thereafter we've seen a bit of a drift downwards. We'll be curious to know as to what Kush thinks of this because he's standing by. But let's look at the heat map as well. Try and zoom in. This is the Nifty Bank for you as well. Geofin, Adani Ports, no surprise frankly, Adani Ports being there, but the top gainer on the Nifty is Adani Ports today along with Geo. Shriram Finance is the other one along with Adani Enterprises. Grasim are some of the gainers. The losers are an IndusInd, which has held really well over the last few days despite the kind of volatility we've seen. ONGC is the other one, and again no surprise there. The cool off in oil prices is keeping ONGC under pressure today. Let's look at the contributors as well on the Nifty. I'm curious to know whether the heavyweights are doing anything. There you go. And HDFC Bank is, but really no meaningful or punchy contributions coming in from any of the heavyweights as we can see there. Let's look at the advanced decline overall on the index or rather on the exchange, and there you go. 540 declines to 1700 advances, so the breadth is strong, but we're seeing a bit of a taper with regard to the advances as we speak. Let's also look at the mid cap and small cap indices, and that gives us a texture as well. You're seeing a cool off on at least the mid cap index, 0.7% higher nonetheless. The small cap index as well seeing a bit of a cool off, 0.8% higher. So you're seeing a little bit of a cool off from the highs, but they are outperforming the Nifty 50 index for sure. At least that's reflecting. Now let's look at the sectors very quickly, and defense right at the bottom, 2% lower, along with oil and gas largely flat. The Nifty IT also in fact has cooled off from the day's highs. The PSU banking index though continues to roar on, 1.5% higher. Metals also up 1% or thereabouts. So those are the two top gainers. Auto also seeing some bit of zing, around 0.7% higher on the Nifty Auto, along with the Nifty Bank largely in tune. The Nifty Bank 0.5% higher. Anyway, what we're going to do is we're going to quickly look at the BSE 500 top gainers, top losers, give you a texture of what are the big gainers. The JM Financial is sitting right up on top, but along with it you have a Swan Energy, where you've had developments. You've had Garware Technical, where you have an acquisition which has happened. We spoke with them as well, and we'll give you nuggets of those conversations all through the next hour and a half. KPIT Tech also down around 6%, the top loser on the BSE 500. But let's take it across to Kush, who's standing by with us ever so patiently. Kush, good afternoon. Talk to us about everything that's happening. What's the sense like? We're seeing we started with very good zing and gusto, but we've cooled off from those highs. Would you be cautious at this point, or are you ever bullish?
Hi Harsh, first very good afternoon to you and to all the viewers. I remain ever bullish. However, the small caveat is, if the closing would have been above 25,250, there's still some time for it. But I don't think it will happen given the kind of options setup that we're looking at. But if the closing would have been above 25,250, the view would have been slightly different. Is that we would have completed a breakout, and if you would have been in a new territory, a new up move territory, and from there on, 25,500 and 25,700 would have been the next targets. Right now, what we are seeing is that resistance being acted, being respected right now. So I think if you have a position, it's not a bad idea to continue to hold. I wouldn't create a fresh, because what happens from here is that the resistance comes close to the 25,200, 25,250 mark, but the support is slightly a deeper place, which is 24,800. So the risk reward ratio not favorable. I will still focus on the bank Nifty, where on the upside you've got 56,800, 57,200 as your targets, 56,000 or maybe just under that comes as a good support zone. Trajectory remains bullish. So on the whole, a little more constructive on bank Nifty. However, this too could see some sideways consolidation. Also, let's not forget, we've not had any fresh positive triggers in the sense, we've had a good, a rather good news flowing in this morning, but that is more of bad news being taken off rather than any good news flowing in from a domestic perspective at least. So I'll wait and watch. For me, this is a hold kind of a situation, not really adding on fresh longs. As I said, 25,250 remains the mark. Closing above that will push Nifty into a new, up move, new uptrend.
Okay. Talk to us, Kush, about your top picks as well. Let's take that out of the way before I push some questions onto you.
Sure, have to be on the long side. Both of them, Sindalco and SBI Life. Both these stocks have seen, a good build up over the last few sessions. Didn't really react much to what the rest of the market was doing. In Hindalco's case, you have a good breakout above the 650 mark, which it was resisting for the last month or so. So 680, 698 are your targets. 640 is where you place that stop loss. On the other hand, SBI Life too. Very interesting moves, consolidation with a positive bias over the last 15 sessions. Today, it's given that break above the 1830 resistance zone. So on the upside, you've got 1895, 1945 as your targets. 1800 comes in as a stop loss.
Okay. Kush, what do you make of the moves in defense? Are you cautious at this point with regard to defense?
I am, Harsh. The reason is that there aren't any fresh positive big up moves in some of these. And while they have corrected to some degree, the likes of HAL, BEL, while they have corrected to some degree, from their highs, the momentum isn't just strong enough to take them past that, and they still remain at slightly elevated zones. That said, I still do like, Hindustan Aeronautics. It's close to that support zone of 4,800, 4,850 that is respected. I think it could consolidate and give you that run up close to the 5,100 mark again. But barring that, I think there are very few and far in between names which could give a very big upside from here on, in the defense space. So as long as you don't see another 5, maybe 10% kind of a correction in some of these names, the risk reward ratio will not be as favorable. So you could play the smaller trends, but for a larger trend, I think a correction of 5, maybe even 10% is due.
And Kush, curious to know your view with regard to a specific counter, JM Financial. That one is just flown off today. It's around 8% higher as we speak, despite the cool off, not seeing any cool off on that one. What's the sense like at 151 apiece?
In fact, Harsh, the move for this one started about 2 months ago. At 82, this was on a roar, and it had a tear-away rally. What happened in the last few sessions is actually more of profit booking than anything else. I think it's back to its winning ways. Once it takes out this 155 mark, the rounding bottom formation from a near-term perspective will also be complete, and you're looking at targets about 165, 180 as well. So if you have a position, you should continue to hold. Fresh positions should be added above 155.
Okay, and what do you make of this PSU banking rally, Kush? I'm curious to know, because you've not been as bullish in that pocket, unless I'm wrong. But talk to us about what's the sense like now. It's very close to starting to go towards all-time highs. Give us a sense of what you think.
Now PSU banks become an interesting play. They had a stellar run early May, late March, late April. Then you saw a round of profit booking. Now they've corrected to all meaningful support levels. For example, if you take a Canara Bank, it did correct to its 50-day moving average and is rebounding from there. If you take a PNB, the convergence of the 50 and the 200-day moving average acted up, and then it's rebounding from those levels. So now the risk reward ratio is favorable, and the price action is also showing an uptrend. So a Canara Bank for targets of 120 and 130, becomes an interesting play with a stop loss around the 100 mark. PNB also, this convergence of 50 and the 200-day moving average around 101 becomes your stop loss. On the way up, 111 and 115 become your targets. So some of these moves are now starting to become interesting. The correction that was due had come about, and now you're seeing that uptick. So yes, you could now positively participate in some of the PSU names as well.
Sorry, but does it have legs to touch all-time highs, the PSU banking index, on the back of the kind of move that it has already seen? Of course, all-time highs are far away, but even 52-week highs at 7,500 is a decent upside from here.
So Harsh, I think that the volumes on the way up right now aren't really as big to suggest that you could reach the near-term highs that also they made. But what's happening is that the trend is starting to turn positive from the price action perspective and the volume action, which is starting to pick up, but not there to suggest that we'll cross the recent swing highs that we made. But as I said, the profit booking due, rebounding from support levels, we'll take these as first indications of a new rally beginning in some of these names.
Okay. Kush, always great getting perspective from you. I know that this was a bit of a googly, but thanks for that perspective. Give us your take with regard to a trend, Kush, because that is one stock while may not be buzzing in trade today, but has done ever so well. It's 1% down today, but yesterday was the top gainer on the Nifty. So give us perspective on what you think of a trend.
Good moves on this one, steady upswing, but I think now it comes at the 200-day moving average, also the rounding bottom resistance around the 60 to 50 mark. So I would wait and watch. If I had a position, I would continue to hold, but any fresh position should be added once 60 to 50 is taken out. And again, here to the volumes, except for a day, about 2 sessions ago, aren't really as encouraging to suggest a very clear breakout and a sustained, uptrend in a big way. So yes, the bias remains positive. I will continue to hold, but I wouldn't suggest adding fresh positions.
Okay, and Kush, do you have a view on an Adani Ports?
So, among the entire pack, this is one stock which has actually done well. Even Adani Power, for that matter, shows strength. Right now, this has come up to the 20-day moving average resistance, 1420 being that number, not able to take out. If it crosses that and sustains above that, yes, that's when you should consider, a long trade for targets of 1490 and the stop loss around the 1360 mark. But right now, we've seen it give up, the gains that it had made during the day in terms of the highs at least. And 1420 becomes a bit of a resistance. So once it crosses that, should you consider a long trade on Adani Ports?
Okay, Kush, thanks for those views. Stay with us. What we're going to do is we're going to go across because Ashok Leyland is one of those which is in focus. You have the company which has expanded its reach in North India by adding 50 new checkpoints. My colleague Rishabh Bhatnagar spoke to Sanjeev Kumar, who is the president of the medium and heavy vehicles division at Ashok Leyland, to understand the company's expansion plans, among, of course, other things. But listen in to a slice of that.
I'm joined by Sanjeev Kumar of Ashok Leyland. Thank you so much, sir, for taking time out. Firstly, about your announcement today, you're adding about 50 plus checkpoints in northern India. Talk to us about a couple of headwinds as well as a couple of tailwinds that you're seeing for the MHCV industry in northern India as well.
So, hi Rishabh. Let me talk about tailwinds first. The government capex, which started which gained momentum in Q4 of last year, is something which is going to create demand in core industries like steel, cement, and it's going to help overall CV industry. We expect overall monsoon to be in a positive side, and it will definitely improve the overall agri output. As you know, all these things are positive for CV industry, and we expect CV industry to get benefited out of this. Even e-com is showing a positive trend, whereas now customers in tier 2, tier 3 cities are opting for products through e-com service. And this again leads to demand in the truck industry. Government requirements from state transport undertaking are also very encouraging, and we expect orders from majority of state transport undertakings to continue even in current financial year. Talking about headwinds, I would not call it a headwind. I would call it a temporary blip. We have seen the advent of dedicated freight corridors both in east and west, and railway is also getting very efficient. So this would definitely pose some challenge to logistic industry, and in a way it is good also, because it will help us to improve overall efficiency of the sector. This could, for some time, can take away some loads from road to railway. Otherwise, I would say that all other indicators are positive only.
All right, so that's the focus on Ashok Leyland. But just a quick look at what's happening in the markets, and you're seeing a pretty sharp come off from the highs of the day. So some pressure coming in, especially in the last half an hour, 45 minutes or so. Nifty still in positive territory, but giving up most of its gains through the day. I mean, from a day's high of 25,317, you're seeing quite a steep fall there. But what's working though are certain stocks, especially those which are seeing the reverse of the ceasefire. So look at an LT Foods this morning, for example, a KRBL. I mean, some of those stocks really firing up. All Adani Group stocks also in focus as you've seen that reversal in stress and tensions, geopolitical tensions in West Asia. Now, to further this conversation, I'm joined now by Alok Agarwal, Head of Quant and Fund Manager at Alchemy Capital Management. Alok, great to have you in the studio. Thank you so much for joining in. You know, just looking at how rocky the last few days has been and some kind of finality that one hopes for. Frankly, no one can say anything in these days. Do you think that the worst is behind us as far as the geopolitical play is concerned? And now we can start, worrying about domestic factors.
So rightly put, in fact, in the last 3 months or so, what not has happened, starting this quarter with the tariff war kind of stuff, who would have imagined that would cool down so easily? Thereafter, the Pahalgam attack, Operation Sindoor, and this Middle East war as well seem to have started and ended in less than 2 weeks' time. We can't really be too unhappy with the way markets have reacted to it. They have been pretty resilient, pretty strong. And all this is happening at a time when corporate earnings came off better, the macro indicators are improving. So we are in a much better spot than one would imagine, given the kind of backdrop of events that have happened.
Okay, and in this space right now, if you're looking at the markets right now, obviously come off the highs of the day, do you think that underlying concern is there that you will see a sell-on rise in the market even going further? I mean, we've seen quite a sharp drop from the highs of the day today.
Yeah, regarding 1 or 2 days, they may react to the news events. Markets in general over the medium term to long term, they try to react more to the earnings side and the growth side, which numbers are improving. In fact, if you look at the current quarter's numbers also, when we went into the quarter, the estimates weren't really high. They were barely about touching double digits. But with Nifty 500 reporting close to 11-12% earnings growth, that's pretty good. And if we leave out the top 50 companies out of the Nifty 500, the bottom 450 actually reported more than 20% growth. So you can't really be complaining too much. And all this was for the March quarter. For the economic activity indicator in the month of April, the collections of GST in the month of May, which belongs to the activity in the month of April, that was highest since October 22. So numbers are looking up. Markets want to react more to that. Possibly that's one of the reasons for the resilience of the markets.
Were you worried about the advanced tax numbers and the fire drop there?
Not too much out there, but yeah, I would have been happier to see a healthier growth.
Yeah.
But I would be more keen to see how the Q1 numbers pan out. The setting up looks pretty good, but yeah, looking for the Q1 numbers to be stronger.
Alok, joining in, wanting to understand, therefore, you've put it into context very well in terms of your views, but put into context valuations, therefore. The large cap index not really looking particularly expensive, but not looking cheap either. The mid cap is actually more expensive than the 5-year averages. And the small cap is okay as well. So how do you rationalize that and where do you sit with regard to?
So Harsh, looking at the P ratios, it's easier to say that yes, mid caps and small caps are at a premium. But they need to be looked in context of the earnings growth as well. So let me first compare the P ratios itself. Today Nifty would be trading at somewhere around 22 times on a 1-year forward basis. And mid and small caps, especially mid caps, are trading somewhere around 35% premium to the Nifty.
Yes.
If we look at the last 5-year averages, there are also 35% premium. So we are in and around the averages of the last 5 years.
Sure.
The peak was 70% premium. So that peak has corrected. But you look at the earnings growth as well. If I just concentrate on Nifty 50 index or Nifty 100 index, Nifty 50 index next 2 years earnings growth are in the vicinity of just about 10%. But if you look at the mid cap index or the broader market indices, the earnings growth estimates are close to high teens. So, for nearly double the kind of earnings growth projections for next 2 years, if you have to pay a 5-year average premium, will you call that too expensive? Is anybody's call.
Sure. And within that high PAT growth expectation, where do you find the opportunities? Where do they lie?
So the opportunities are lying in multiple sectors, and a lot of these sectors either are newer found sectors or they weren't doing well in the last decade. The ones which are near found sectors, I would say the way the capital markets have bounced back, the way the travel industry in terms of be it aviation or the hotels, etc., have bounced back. The discretionary spend patterns have been changing. Say about 15 years ago, when India was under $2,000 per capita, what was discretionary is slowly becoming staple. And higher ticket discretionary items, especially after the COVID, which we saw as K-shaped recovery, that's becoming far more prevalent. So those segments are the ones that are bouncing back. Electronic manufacturing was virtually absent. So that came to the forefront. Defense was virtually absent. So these have bounced back nicely and show good growth projections.
I'm just wondering how you're looking at IT right now, Alok, because there seems to be a divided house on it. The Accenture results put a bit of fear in the way people are looking at IT, but all things considered, if you're going to see a drop in interest rates in the United States coming in the July policy, and if recession fears recede, do you think Indian IT now has a fair shot as we set up for the next result season?
Short term, it's very difficult to call. Markets tend to have bounce backs or corrections in the short term. But when we look at slightly more medium term, it's difficult to be extremely positive on IT, at least the frontline IT as of now. The earnings growth, what has been there in the past compared to what can be in the future, they don't look as exciting. So, see, it's no-brainer that given the kind of growth trajectory in the US or with the advent of AI, the kind of growth that the Indian IT saw in the last decade will be difficult to replicate in the next decade or next few years. And last 5 years and 10 years, their average as a sector, earnings growth has been just close to 10%.
Sure.
So a country which is growing at a nominal GDP of close to 11%, corporate earnings to GDP at a 17-year high, you need to have much higher growth rates to be considered to be overweight.
And then therefore, so give us some sectors and give us some themes that you're liking.
So the themes that we are liking, we do think that the manufacturing as a percentage of GDP has been rising, is likely to continue. It can be multiple segments out there, but the focus areas right now are more on the defense and power side. Possibly in coming years, it will be on the railway side as well. On the consumer discretionary side, we are more on the K-shaped recovery. So be it the high-end watches, be it the jewelry side, be it the high-end car side. Those are the segments that are doing well in the travel side, as well as I mentioned on the hotels and the aviation side. The electronic manufacturing is also an important part. Who would have imagined that electronic exports would become the largest export ticket item for India? The EMS space, and in discretionary, I would also classify financial services like capital markets within the discretionary space itself.
Sure.
So those are the areas that we are more positive on, and these segments are actually going at a much, much faster pace, and that's what we want to concentrate at.
Okay, and where is the confluence between growth and value? You've spoken about a few sectors. Some sectors have good growth, some sectors are looking good in terms of value. Where are you seeing that confluence?
That's a tough choice. To get in India a good growth and good quality and at a cheap price, that's very rare. It's extremely rare. If mining for gold is easier than finding those. But let me put it this way, instead of just focusing on the valuation or P ratio, focusing more on the PEG ratios would give you a much better idea.
Okay.
So given that the index is trading around 22x for a 10% growth, your market is available for 2.2x PEG ratios. If you can have much higher growth rates for a PEG ratio lesser than that, you are more or less in a territory which is called growth at a reasonable premium.
Point taken. Alok, what are you doing at this point? Are you sitting on cash? Are you going out and buying? Give us the strategy. How much of the fund has cash and how much of it is deployed? And talk to us about the last 3 months as well. What have you done in terms of deployment versus holding cash?
So as for me and as a house, we don't really believe into holding too much of cash.
Okay.
So we remain deployed. I'll share an interesting piece of data. A lot of such data have been shared. Last 20 years, we all say around 14-15% market returns have been there. But if you miss out just 2 days per year, which are the best days, sort of 5,000 days you are participating in, say 49-60 days, yet your returns could come down from 14-15% to about 5%. So it's a futile exercise in our view. to really jump and say that what's going to happen and when the markets are going to rise and fall. Our expertise are more into finding which sectors and stocks are doing better and which are in a not so favorable position. So we believe into deploying the funds that we have. So we are majorly deploying, not taking cash calls.
Okay.
Focus areas are growth areas. So we are GARP investors. And for GARP, the first word is growth.
Yes.
And as I said, if the country's nominal GDP grows at around 11% and corporate earnings is rising at a faster pace, your portfolio corporate profit also needs to rise at a faster pace than that. So that's the area that we look at.
For viewers, the perspective, GARP is growth at the right price. And Alok has been very kind in defining what the right price is a couple of times, including the PEG ratio, which he said that the Nifty PEG ratio is 2.2, anything below that with a decent kind of growth clip, visibility over the next 2 to 3 years could well be your pick. So thanks so much, Alok, for coming in.
Thank you.
Speaking with us. Okay, let's move on though. The Heavy Industries Ministry is planning to offer subsidies through competitive bidding for companies that will manufacture rare earth magnets in India. Officials said that PSU Indian Rare Earth Limited already has around 1,500 tons of rare earth oxides. The raw material for these magnets is that. Listen in as we slip into a very short break.
Regarding that, actually, continuous meeting is going on. Ultimate decision we have not taken, but we are working out. Can we expect any incentives for manufacturing? Hyderabad, one company, they are showing interest. They are promised that they will deliver 500 ton by this year end, December.
So essentially that the global prices of oxides, rare earth oxides and rare earth magnets on the Shanghai Stock Exchange, if you go and visit it, you will find that the difference in the price of the oxide and magnet is minimal. It is hardly say 5%. So there is a feeling that since China has a monopoly on it, it keeps the price of magnets very low. So the level of this incentive, so what is required is that if you start from oxide and reach a magnet, you have to spend some money in between. So quantum of that expenditure which companies have to invest from oxide to magnet, how much government support is needed, that is to be worked out.
Processing will be subsidized basically.
Yes, essentially the magnet made in India must be competitive with magnet made anywhere in the world.
Where will the rare earth be sourced for that magnet?
So Indian Rare Earths Limited is a company under the Ministry of Atomic Energy. So they are the sole repository of rare earths in India. They have enough rare earths to make 1,500 tons of magnets every year. So that is source one. Honorable Minister had a meeting with Mining Minister. So there are also efforts going on to, some companies are making efforts to bring rare earth from outside the country.
So the subsidies will be for processing and not for sourcing the rare earths?
Right now, whatever rare earth we have to convert into magnet.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching India Market Close, and some improvement, some perking up in the markets were completely flat, actually, given up all its gains. But you're seeing some improvement in the last few minutes or so. Nevertheless, no denying that most of the gains of the day have been given up, not been able to stand up for it. And Nifty PSU Bank doing okay, telecom stocks doing okay, but on the whole, you're not seeing markets really holding up. This is the time though for stock picking, and now time for our segment, which you should absolutely not miss no matter what you're doing. Samit Sarkar, have you seen anyone boosting your segment as much as I do?
No, well, okay, so I'll focus on the stocks that are in focus. Firstly, it's Poonawalla Fincorp. That dealers are indicating that the old promoter, that is Mayank Poddar, he holds some stake in the company, around 2.12% stake, and this block is likely to come into the market anytime soon. Most likely it will be a cleanup trade, so the entire 2.12% stake would be coming in for the block. So keep an eye out for Poonawalla Fincorp here. Then there is ASK Automotive, HUDCO and IndiaMart Intermesh. For all these three companies, dealers are indicating that large HNIs have started to accumulate these three counters. Most likely it might be for long-term perspective is what dealers are indicating. When it comes to Cummins, now the stock has been buzzing into it, has been gaining. Dealers are indicating that these gains are largely on the back of the fact that the company might announce a large order win anytime soon. When it comes to CG Power, dealers believe that the company will be launching its fundraise via QIP anytime soon. Now, earlier they had taken an approval to raise around 3,000 crore rupees. So most likely the deal size is expected to be around that amount. But the QIP is expected to be launched anytime soon. When it comes to Taj GVK, dealers indicate that there's a buzz of a potential block deal that could happen in this counter. So keep an eye out for Taj GVK. The seller is not known yet, as of now for this counter. For Yathartha Hospital, as per dealer checks, the promoter of the company might be buying shares from the open market. That's what dealers are indicating when it comes to Yathartha Hospital. And lastly, for JM Financial, that stock had perked up in trade. It was up around 10% at one point of time. Dealers are indicating that the buzz on the street is that the company might look to sell its non-core business, that is the lending business, because they're more focusing on the core business, that is the fee-based income, where they have the wealth management business, and that has been doing good for them, and they aim to focus more on that business and exit the non-core business, and that is the reason why the stock had perked up around 10% in trade today.
I definitely think that buzz as far as JM Financials is concerned. In fact, let me welcome G. Chokalingam as well to our conversation. Thank you for that. As always, Somit, we'll see you back 8:45 a.m. tomorrow. Chokha, let me talk about JM Financials and some of the capital market plays. A favorite story, on again, off again. Do you see a comeback for some of these, and JM Financials specifically something you're tracking?
Yeah, definitely. One can consider buying it. We looked at it. There are many sums to the total business, including the investment banking. And, I am quite bullish on medium to long-term prospects of the entire capital market itself. So these intermediaries should be beneficiary of, the long-term, very positive outlook for Indian capital markets.
Right, so that's the word coming in with regards to capital marketplace. A few of the other names that Somit was mentioning is with regards to Ask Automotive, Hudco and India Mart. In fact, Ask Automotive would be one of the key beneficiaries as well with regards to two-wheeler ABS systems co, and that's the notification that the government recently came up with. And you're seeing some smart moves on this one. Kush, between Ask Automotive, Hudco and India Mart, where would your bets be?
So I would prefer Ask Automotives and then Hudco. If you see the moves on Ask Automotives, very encouraging. Even then in the last 5 sessions where there was so much turmoil and mixed news flow, this stock has actually held its ground, gained ground in fact, and has had volumes seen move higher. So I think for targets of about 505 and 525, this looks set for a good up move. Hudco also shaping up well. It's right now into a bit of a consolidation zone. But once past this 235 mark and closing above that, actually it could push it to 250 and much higher levels. As far as the the India Mart Intermet story goes, this one's been steadily rising, but it's had its fair share of volatility. So I'll be a little watchful on this. Plus, there is a negative RSI divergence setting up. So just a little caution. But other than that, the medium-term trend on this one too has been bullish. If I were to pick, it would be Ask Automotive and Hudco.
Okay, so that's with regards to Ask Automotive and India Mart, where Kush has his clear bets coming in there. Hospitality is another space which has been doing the rounds. Though you're talking about a buzz of a block deal that could be happening in a Taj GVK. Mr. Chokalingam, with regards to hospitality, what stock would you look at? Because you have Indian hotels as well, where majority of them have bullish calls versus the others, but good growth coming in a few of the other recent listings as well. Your top pick.
Among all this, Taj GVK could be a best stock. If you look at the EV to EBITDA, it is one of the cheapest. And not only that, it's a joint venture between Indian Hotel and GVK Group. And we all know that many business of GVK Group are having some pressure in terms of leveraging. So, tactically, it is possible for Taj GVK to get re-rated. Apart from that, the stock also has fallen a lot. So at least around 450, 460 should be the very, very most conservative target price for Taj GVK.
I'm wondering how you're feeling about Interglobe. That whole tourism space, and BSE actually has a tourism index as well, which is doing fine today. But that whole tourism space has been muted in light of a lot of geopolitical issues. Then you had Air India, the situation, and that very unfortunate crash. You had Operation Sindhu. Then you had this war, 12-day war going on in West Asia. Concerns there. Do you think the turnaround that we're seeing and the coming off of crude prices is something that is going to boost tourism? Would you look, say, at an Interglobe, Lemon Tree, and an IHCL, those categories once again?
Definitely, among all names you have mentioned, I would prefer Interglobe only. Yes, I agree with you. There is a fear in the minds of many public in freely traveling, particularly abroad. But people will forget it because at the end of the day, we all know that the probability of accident in the flight is the least compared to all other modes of transportation in the world. So people will forget. And here, the oil price has crashed. In just 4 days, oil price is down 10%. Once again, it is very weak, which is favorable. And again, the competitors would find it difficult to compete with the leaders. Well, not only aviation, any business today, the size is the king now. So considering all that, I would go after Interglobe.
Okay. So Interglobe, even at current levels, Kush is something that you see as a buy at 143 rupees up today.
So, well, I think I'd wait and watch a little because the 5,700 mark, has proved to be a bit of a resistance. So, if you're looking for a near-term trade, then you might have to just wait and see this one being taken out. But other than that, and if you've got a 3 to 6 month kind of a horizon, then not a bad idea. You could consider it had that dip that was much anticipated, much needed as well, and has seen a good rebound. Just on the point of the hospitality sector, I think Sami Hotels is one stock that is actually looking well. A lot of these names have been consolidating without any major moves, but Sami Hotels has had a good run, still respecting the 20-day moving average. So Interglobe, if you have, you continue to hold, but if you want to add, you could look at something like a Sami Hotels.
Sami Hotels is the other one we're looking at right now. I was just here looking at market shares for Indian aviation players. And the fact is that one way or the other, Interglobe comes out on top because you even have Air India cutting down its domestic as well as international flights.
And with that, the boost that Air India is facing right now, the clear beneficiary becomes Indigo, not only from a domestic perspective, but also from an international perspective. SpiceJet right now is nowhere in the picture if you have to compare from a market share perspective. And number two, from a stock perspective, if you have to look at investments as well, I think the entire gung-ho for analysts is a Indigo versus a SpiceJet.
Yeah, I mean, in market share, SpiceJet not quite there.
That's what I'm saying. So exactly. Yeah. So I mean, even from investments, that's what the analysts are alluding to right now.
Yeah, let's pull up the SpiceJet stock as well. The numbers was something also 2.5% up.
I mean, that's on crude, right?
Yeah, on crude, and also you recall their numbers weren't half bad. They look like they're turning around. But nevertheless, let's get to the stock of the day, and that's clearly Bajaj Consumer Care, seeing a fantastic buzz because of a management change. Mahima joining us for more details. Mahima, what's going on?
Right, so as you rightly mentioned, we're seeing the up move in the stock. In fact, it touched an intraday high of 19% in trade today, and this is after a long time that a stock like Bajaj Consumer is seeing significant amount of moves. It's appointed Naveen Pandey as Managing Director for the next 5 years from 1st of July. Now, Mr. Pandey has had 2 decades of experience, especially in the consumption space, and this is after Mr. Jaideep Nandi, former MD, who has completed his 5-year tenure. Now, in terms of how the stock is fared so far today, as I mentioned earlier, it's touched an intraday high of almost 19%. The stock rebounded after an 8-day straight decline. 1 month, the stock is up 14%. 6 months, the stock is down, in fact, 1%. And 1 year, the stock is down around 25%. So today's up moves are clearly standing out for the counter. In terms of volumes as well, the volumes are trading at 37 times its 30-day average. So that's also a significant amount of volumes that are coming in for the counter. In terms of valuations, interesting to see valuations here because at 12 months trailing P, it stands at around 22 times, and 2026 estimates suggest a P of 14 times. So this actually makes Bajaj Consumer the cheapest stock in the entire FMCG staples pack per se. So that is an interesting one here. In terms of what analysts are recommending, there are 8 buy calls right now, 1 hold and 1 sell call with a return potential of roughly 8% as per Bloomberg estimates. And lastly, in terms of the guidance that the management gave during the Q4 FY25 con call, they've said that they're expecting margin improvement going ahead. Earlier, they had mentioned a band of 16 to 18%, but they're expecting margins to go beyond that in FY26. Plus, they're looking to add more than 1 lakh retailers to overall expand the distribution space as well. And management is highly optimistic about demand also recovering from Q2 of FY26. So, this is the overall view of where Bajaj Consumer stands and why it's making such significant moves in trade today.
Yeah, but significant is an understatement. 18% up through the day because of new management.
And last 8 trading sessions, actually, Tamanna, if you go to see, the stock was an absolute downer. If you see the trend, and that's the reason why it's such a sharp catch-up that is coming in here. Secondly, with a renewed management, probably there could be a change in strategy that the street is anticipating, and that could be one of the reasons why you're seeing this kind of a sharp uptick in terms of the stock. But an interesting move. There you go. 1 month, if you see, 15 to 16% is the move, and majority of it has come in right now.
That chart tells the story. Let's go back to that, that spike, that 1 month chart at the end, that spike tells the story. So, we're really excited to speak to Naveen Pandey when he comes in and talks to us here at NDTV Profit and what his plans are for Bajaj Consumer. But G. Chokalingam, is this a stock that you're tracking and you like?
Yeah, I have analyzed that stock. As your colleague rightly said, it is one of the cheapest stocks. So therefore, one can continue to hold. But I don't think it can give a phenomenal return from here. But of course, 5-10% upside is possible because it is one of the cheapest. But the problem for this company is that if you look at the revenue before COVID and now, FY25, there has not been much growth. That is one major problem. That revenue used to be around 935 crore in FY19, which has grown to only 1,000 crore in FY25. The second concern is that the margin has consistently come down from FY19 to FY25. But still, it's a hold. One can definitely hope for at least another 5 to 10% return from the stock, just because it is the cheapest, consumer goods stock.
Right, so that's with consumption. Bajaj Consumer, an interesting name, and as Choka has been mentioning, not a major upside that you could see from current levels as well, and I don't think so a technical perspective is warranted after 18% move in a single day. But moving on, defense play is back in action. In fact, what's interesting over here is, with everything going slightly, silent in terms of the war zones, you have the defense play, which is actually down in trade. You're seeing profit booking that's coming in on defense players as well. Though your brokerages are bullish on the pack, you're expecting the geopolitical uncertainties to aid the pack further, and that's what brokerages are alluding to. Anushi is joining us with more details on it as to what brokerages make out of it and whether this is an opportunity to buy the defense pack. Anushi, over to you.
So what we're seeing for the defense pack is some interesting moves. It's not just a 1 month or a 2 month scenario that we are looking at. Even in the last 6 months, Nifty India Defense Index has been up over 45%. Now we have two interesting notes coming out. Firstly, JP Morgan just specifically talking about Bharat Electronics, where they have maintained their overweight rating, in fact hiking the target price to 490 as compared to 445, which implies about a 16% of an upside. They see that the steady stream of orders and elevated geopolitical risk has led to the outperformance that we're looking at. Even yesterday, the company came out with a couple of more additional orders, so it has remained in focus on that. Even emergency procurement orders are on the anvil, so that is something that we should be watching out for. And the diversified business should lead to consistent outperformance for Bharat Electronics. Civilian and export opportunities provide optionality going forward for the business. So that's JP Morgan on Bharat Electronics. But Jefferies has a more broader view in terms of where the defense index is concerned. Now, India's defense spends, if we see, they have seen about a 25% of a growth in March 2025, and they are in line to achieve the FY25 revised estimate of a 3% of a growth. In fact, if you look at the FY26 defense capex, that has started also on a stronger note with about 122% of an increase in April is what we are looking at. So this is against the 13% of an overall increase expected for the year, especially post Operation Sindoor in May 2025. Government is now focusing on putting India first and is targeting for higher export opportunities as well. If you look at the export data so far, it's seen about a 10% of the rupees 30,000 crore of FY26 target. Do note the FY29 target remains 50,000 crore. Now PSUs continue to remain dominant in the defense space, and private share is also seeing an uptick. The preferred picks for Jefferies remain HAL, Hindustan Aeronautics, Data Patterns, and followed by Bharat Electronics. So Bharat Electronics specifically emphasized in both of these notes that we are looking at. So overall defense pack in focus, and Bharat Electronics is something that we should be watching out for.
Thank you, Anushi, for that. In fact, we also spoke to Amit Mahajan at Paras Defense. Let's quickly listen to what he has to say in terms of the order book picture. What's the revenue visibility looking like?
So currently the order book is in excess of 900 crores. And when I'm looking at just the order book, I'm also looking at the opportunities that are in front of me, which are in excess of 2,000 crores. So what I'm seeing is all of these 2,000 crores, some of that will come sooner than later, and the remaining would come for sure. So all of this will phase out. What if I expect something to come after a year will come before that. So this is the momentum that is there in the industry, and I think we are having a positive problem that we need to keep ourselves geared up for such opportunities.
Okay, what's happening with defense today is very, very interesting because it's a complete reverse trade. Paris defense, of course, 4% down. So is the entire pack. Kush, I'm wondering if this is an opportunity for anyone who wants to really pick up here. Look at a BEML, for example. Look at Garden Reach. You're seeing this kind of a plunge after a while.
I think it will not be a bad idea to perhaps wait some more. I was listening to the comments on BEL. In fact, if you ask me, this is the one that actually needs to be avoided at the current levels, at any cost. In fact, if you have a position, it's not a bad idea to book some profits, sit on the sidelines with a BEL. Overheated on daily time frame, weekly time frame. The risk reward ratio is just not attractive. Some of these other names have corrected, as you rightly said. GRSE is taking a knock today, a bit on HAL as well, but BEL just hasn't corrected at all. So I think I will wait and watch on some of these names. Another maybe 2 to 5% or maybe even deeper as well. A cut on these names will actually make them more attractive. So wait and watch. I wouldn't be in a rush to buy. That said, HL is something that is on the radar. It's taking support near the 48.50 mark. If it does hold on, then could make for a good range play where on the upside 5,000, 5,050 becomes the target. But if you're looking for that next leg of big up move in this entire sector, I think you should wait it out. There is some more downside left, in some of these stocks. That's what at least the chart suggests.
Do you agree with that, G. Chokalingam? Some more downside left for defense story, and I'm telling you, this is one story that has been written off I don't know how many times, but somehow has a way of perking back. Do you think that for now there's going to be a pause?
I think so. We are talking of all these stocks which are trading at 42 ATP, if not more. And second, so far in the last 3 years, starting from February 2022, 6 nations had involved in the conflict. And majority of the nations are also rushing back to ceasefire. I believe I am a strong, believer in economics. So I believe the wants have increased, and public in many countries are not interested in sacrificing life for sake of war. So there will be a lot of pressure to go for ceasefire and bring peace in the world. Apart from that, the valuation also, as I mentioned, do not give me much comfort. So therefore, I would suggest a lot of caution while buying these stocks at the current valuations.
Right. So that's with regards to defense. In fact, you have 2 new entrants that are coming in the defense space. That is Swan Energy and Balu Forge. In fact, they've announced a pact to tap into high growth segments, including defense, aerospace, railways, and nuclear industries. Both the stocks are seeing some smart moves. Puneet joins us with more details.
Well, Swan Energy as well as Balu Forge, both listed companies, are in focus today after both the companies have actually formed a JV back in April, and now they've come out with some more details on this. So essentially, Swan holds roughly 60% stake in the joint venture, while Balu Forge holds the rest 40%. The JV, as I mentioned, was incorporated in April of 2025, so it does not have any kind of revenue track record, but it is to explore the potential for supply of products as well as services that are largely having scope in sectors like defense, railways, aerospace as well as nuclear industries. That's what the company has mentioned in its exchange filing today. What's also interesting is that while something like a Balu Forge has been increasing its capacity into forging as well, these would be related industries which the other companies like Bharat Forge have already entered into, like defense. So this joint venture could have a multiple scope for new products amongst different industries as well, and that will be one of the key focus areas going forward. But for now, they just specifically mentioned the stake as well as the specific industries they might be looking at, and it's one of the key monitorables going into the Q1 results as well for the company.
Thanks, Puneet, for that. Mr. Chokalingam, a quick one, and a new entrant coming in. You have Swan Energy as well as Balu Forge. Do you think you would put your bets on both these names?
No, I mean, forging for defense, I don't think deserves 40 PE. So I would stay away from both.
Right. So stay away from Balu Forge and Swan Energy with their entry into the defense, aerospace and railway territory as well. But thank you, Kush, so much for joining us on the show. Mr. Choka, stay with us. We'll quickly slip into a short break. On the other side, we'll get you the top buy today, sell tomorrow picks as well.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching India Market Close. Well, market's in a bit of a mood. The euphoria coming off, definitely. But one stock, well, there you go. It means again dipping into completely flat territory on the Nifty. And I wonder if we manage to stay above in the green as we're closing in. So some stress over there. One stock which is definitely pulling the street down, or at least its sector down, is KPIT. KPIT has been in focus because of a brokerage report actually, which quotes the company's half-quarter, mid-quarter report in that sense, and their sense of what's happening. They're saying they're seeing sluggish demand environment, delays in finalizing deals, which is why you're seeing that 6% knock on KPIT today, although very close to the day's lows. Should investors really be worried? What's the bear case, of course, and what's the bull case for KPIT? Jasmeet joining in for more. Yes, Jasmeet.
While the stock is down 6% today, and let's do an analysis and understand what's the bull and what's the bear. First we have is the company had a strong order pipeline back in FY25 with $925 million of deal, while the latest deal includes the Mercedes deal which was signed in the month of December. Then the bear case is the deal pickup is slower. That's what management is expecting in the latest breakdown of the quarter. The next case we have is major revenue contribution is seen from the Europe. While the Europe looks better, it contributes most of the revenue, that's almost 48%, but US and Asia remain sluggish. There's weak demand and weak turnaround for the revenue, where US contributes roughly 22% of the revenue. The next we have is management sees some new project truck in and slow projects are ramping up, but on the other hand, the new projects are part cannibalizing the revenue. What this means is, if there is a new additional source of revenue management creating for themselves and the clients are focusing on that source compared to the last one as they have limited budget. The next bull which we have is the acquisition of the latest entity, Caresoft, will add approximately 4% of the upcoming revenue, which has not yet been added in the Q1, but as per Q2 management sees this will add the 4%, while the bear case for this is the management has guided a negative add-on to the other income given the Forex charges. The management roughly deals about 96 to 97% of its revenue in foreign currencies. That's why they see a Forex charge given the geopolitical tension.
Right. Thank you so much, Jasmeet, for the same. So it's an interesting stock to watch out for, because in the last couple of days, we were talking about KPIT as being one of the key beneficiaries, along with the Ask Automotive that we spoke about in terms of two-wheelers anti-brake system, which they're thinking of implementing from Jan 2026. But the outlook that the company has given seems to be slightly grim, and that's the reason why you're seeing that kind of pressure. In fact, we also spoke to Warren Harris, MD and CEO at Tata Technologies, and this has been an exclusive interaction that the management had with NDTV Profit, where he's actually echoing KPIT Tech's mid-quarter update. Let's quickly listen to that as well.
No two companies are alike, but one of your peer sets in their mid-quarter update overnight has mentioned a few things about how deal ramp-ups are not happening in the same pace as they would have anticipated. I would reckon that deal closures or the conversations around deals as well might be slow. Now, I'm not saying that you would suffer or you would go through the same thing, but I'm trying to understand that are you facing for the near term those issues as well, that ramp-ups are not happening at the pace that you may have anticipated at the start of the calendar?
Yeah, I would echo the commentary that's come from one of our competitors. Somewhat counterintuitively, we expected a significant amount of deal signings this quarter because the delays in decision making last year, in part because of the election cycle in the US. And the tapering of EV incentives in Europe. I think many of our customers were delaying decisions because of that, and there was a pent-up demand to invest in new product, and we were planning very much to intersect with that.
Okay, Milan Vaishnav joins in as well this afternoon. Milan, hi, great to have you on the show as always. First, let's just get your take on the indices. Clearly giving up strength, seem to get even as high as 25,300 quite effortlessly, and then just completely collapsing under the weight of that boost. Where are you seeing the Nifty right now?
Yes, good afternoon.
Excuse me. Actually, I'm seeing two distinct possibilities in the markets. I believe that as of now, Nifty has refused to break above that 1.5 month long trading range that it has created, which has 25, 100, 150 zone as a resistance. It has refused to show a clear breakout once again, and right now it stays in a range. But I feel that this is more of expiry-led moves that are happening, because I have consistently seen incremental calls being written at 25,100, 150, 200 odd levels. And therefore, I believe that until this expiry is out of the way, we might see the Nifty continuing to struggle to achieve a clean breakout. That is point one. Point number two, I'm also seeing incremental put writing that is being done in 24,900, 950, 25,000 levels. So we may not see any major downsides below 25,000 as well. So I believe that over the next two sessions, until we are past the expiry, Nifty will fairly stay in a range, but will trade with an underlying positive bias. And eventually, I expect 25,100, 150 zone will be taken out on the upside.
Okay, so that's in terms of Nifty. Milan, very quickly, how are you looking at Bank Nifty? Because, you know, we were just looking at the kind of trends you're seeing with regards to Nifty, Nifty IT as well as Bank Nifty, absolutely divergent. However, the holding in Bank Nifty from mutual funds and FIs is not that strong to see this kind of an up move right now. What should the strategy be with Bank Nifty and your top picks?
Bank Nifty, I would be focusing on 56,000 level, because that was the level above which Bank Nifty formed its high point, and eventually the breakout subsequently failed, with the Nifty Bank returning below 56,000 once again. So right now, purely from a technical standpoint, one can fairly believe that since Nifty Bank has gone above 56,000 levels, it is attempting to resume its up move, and the attempt to break above 56,000 will remain in place so long as it keeps its head above 56,000 levels. So I believe that more or less both Nifty and Bank Nifty should continue continue to consolidate near their breakout levels. That is 25,100, 150 for Nifty, and 56,000, 56,200 for Nifty Bank until this expiry once again. And once we are beyond that, we could see some uptrend picking up. But this comes with a caveat that in event of Nifty Bank slipping below 56,000 and Nifty slipping below 25,000, we would be once again be back inside that that broad but quite well-defined range that Nifty and Bank Nifty has formed for themselves.
What are the stocks that you're looking at this afternoon, Milan?
I'm getting I'm getting a bit defensive here. I would be looking at Apollo Hospitals that could be bought above 7050. With a target of 7550, and the protective stop could be put at 6850. The second pick that I'm looking at is Mahindra & Mahindra, M&M. We can buy that above 3200. The stock is attempting to break above once again a very broad but very clearly defined multi-month trading range. So above 3200 we can buy that. That would be a fresh breakout. The target we can set for it would be around 3450, and stop loss could be placed at 3050.
M&M, what about a Tata Motors? How are you looking at a Tata Motors right now?
Yes, Tata Motors can also be bought, but from technical standpoint, M&M is far better placed. But Tata Motors is also a buy in my opinion.
Chokha, if you were looking at Tata Motors, Maruti, M&M, Hyundai, let's look at those four PV plays with monsoon seeming like they're on track, some demand expected to increase as well. What would be your pecking order here?
M&M, among all these four, last nearly 4 or 5 months, I've been consistently saying sell other stocks and buy M&M, because M&M is beating the competitor in all business verticals, whether it is a tractor or whether SUV, it's doing phenomenally well. And on the other hand, other players like Maruti, Hyundai, they have problems in passenger vehicle. The industry itself is going through a lot of pressure, and the commercial vehicle segment is also going through problem. And for Tata Motor, added problem is the JLR, some pressure on the business outside India. So therefore, the best stock in this pack is M&M. And to some extent, one can, in the picking order, consider Maruti.
So M&M tops the list over here. An interesting conversation I had in one of the previous shows as well, Tabana, was that in terms of Tata Motors, no one is looking at buying the Harrier right now because the street is watching out for the topmost variant that is going to be launched. And the analyst was of the opinion that they're not even looking at buying the stock right now. So no buyers in terms of the stock or for the new Harrier that has been launched so far.
Yeah, I think the all-drive variant is what everyone's waiting for. But some interesting commentary coming in from a Tata Motors, conference today as well, where they're meeting up with the team, and our colleague Puneet is there, so we'll get a report up from him shortly on what has been cooking there. Now, Macquarie has a positive view of the Indian cement sector, expecting a demand-led recovery to drive earnings. Anushi joining in with details of what Macquarie is saying on cement.
Hey, so it's a demand-led price hikes that we are looking at for the cement sector. Now, what the story building up here is that we are seeing good demand, which should support the price hikes going forward. Now, this is the view from Macquarie that we are looking at. In fact, they are seeing that the demand momentum should drive cement prices following a muted FY25 outlook that we had seen in terms of where cement prices were concerned. Cement prices increases have been started noticing from H2 of FY25 lows, and improved demand outlook versus FY25 augurs well for earnings growth as well. In fact, in terms of the capacity consolidation and cost focus also, which has been the two focus areas, will drive the medium term's earning growth as well. Now, over here, Macquarie has stated that they prefer companies remain in that domain wherein the diversified geographical mix, it has a more diversified geographical mix along with higher cost focus. Just according to that, we have a couple of companies in focus. Firstly, for Ultratech, they've maintained an outperform rating, hiking the target price to 13,008 now. For Shree Cement, they've maintained a neutral rating, hiking the target price to 28,630 as compared to 26,778. For Ambuja, again, outperform rating that we are seeing with the target price of 608. ACC along with that maintaining an outperform rating, but they've cut the target price to 2,117. For Ramco, we are seeing they've maintained an underperform rating. For Dalmia, they have maintained an outperform rating, again hiking the target price to 2,353. So this is the overall demand picture that is going to support the price hikes, which could lead to the earning growth trajectory going forward for these cement companies out there, and these are some of their ratings that are there.
Okay, so cement, cement again, and we had this conversation this morning as well, Hiral. The monsoon has sort of dampened the outlook for cement as well, and no clarity yet on whether they will end up increasing prices or not.
And it's going to be very brave of them if they'll end up increasing prices in a season which is a downer, right? So it's going to be an interesting mix if they increase prices at this current juncture. If they do, whether there will be takers or not, or whether there will be retaliation from the dealers, is something that we need to wait and watch and see. But probably Mr. Chokalingam will tell us whether he is a buyer of any of the cement stories right now with that increase in target price that we are seeing from a Macquarie.
Yeah, certainly the cement industry is going through cyclical downturn, no doubt, in the recent time, and volume growth also in poor single digit. On top of it, now you have a monsoon which started this month. However, many stocks have corrected a lot. And second, this business cycle of cement industry also assures you a solid recovery after some time. So I believe, beyond September, definitely the outlook would turn positive once monsoon gets over. And one can consider, stocks like ACC. I looked at the fundamentals. Stock has crashed a lot, that one can consider buying. And in the small cap, one can consider KCP Limited. It's a diversified company with a cement business and also a highly profitable sugar business in Vietnam, and a lot of cash on the book. And just a disclosure, we also personally invested after recommending to our clients in KCP.
KCP in focus as well. All right. Meanwhile, some flashes on your screen. Railways have hiked fares, and this is like after a while that I've seen new fares or a hiked fare from Railways. 1st July 2025 is when this is going to happen. There's no effect on local and monthly passes as of now. But it'll, those monthly season tickets will also still be available at the old rates. But quite bold, not seen a fare hike in a while from any sort of authority that has come in. Just want to see what IRCTC is doing, what Titagarh is doing. No direct impact as such, but let's just take a look at some of those stocks. IRCTC is not doing much at all. Titagarh, Jupiter are just a couple of the others that we can quickly check if we can move those on. All right, RVNL on your screen as well. Titagarh about 5% up in trade. But, so Railway is doing okay today. Railway is doing okay, defense is not. Defense is having a bad day, PSU banks are doing fine. Pharma is another space which has focus. So Wegovy is here. It's a once a week injectable weight loss breakthrough. Globally, it's now in India. It promises effective obesity treatment with multiple dosage options and widespread pharmacy availability by the end of the month, marking a new era in health management, says the company. They had a press conference today, and my colleague Agni Dev brings us all the key insights.
Big Pharma is back in India with a cure for your obesity, but only if you're rich enough. Novo Nordisk has just launched Wegovy, a semaglutide brand which claims to cure your obesity and reduce your weight by up to 20% if you take the doses right. Now, the doses start with a 0.25 milligram dosage for a month, which will cost you around 17,345 rupees. The next dosage of 0.5 milligrams a month will again cost you the same, actually 17,345 rupees, and the next dose of 1 milligram will be the same. But from the next month the prices go up. So 1.7 milligram, which is the fourth pen that you see here, costs 24,280 rupees, and the last dose, which is the 2.4 milligram, costs 26,000 rupees. So if you're willing to dish out that amount, then you can also lose 20% of your weight. Now, losing body weight also comes with its added advantages. The risk for your cardio conditions go down, which is conditions like non-fatal heart attacks, heart conditions and all will also be reduced. Now, Wegovy's entry into India comes at a point where there is a very large addressable market. 24 crore Indians suffer from obesity, and the obesity drug market is currently valued at just under 200 million. And globally, the market is valued at around $5 billion. Now, Wegovy's entry is a bit late compared to what its rival Eli Lilly has done. 3 months ago, Eli Lilly launched Mounjaro, another obesity control medication, which is priced slightly lower to what Wegovy is offering. So Mounjaro, remember, is priced at around rupees 14,000 to 17,000 a month. But Wegovy's entry is also at a time when semaglutide, which is the generic for Wegovy, is bound to lose its patent. Now, this patent will be lost somewhere around March 2026, and we already know that big Indian pharma companies are already racing to make their own generics. Now, the management has talked to us, and they have indicated that competition is not something that they are really concerned about. It's about addressing a market together with all the involved players. But how is this supposed to play out for Wegovy and Novo Nordisk India in general? Well, only time will tell.
The pricing for the pen, we have what we really call is the smart pricing, 0.25, 0.5 and 1 milligram. They are priced at 17,345, and that means that weekly treatment for all the 3 stents is actually 4,336. And that is actually very, very good, because patients start with a dose of 0.25, they escalate to 0.5, and then they go for 1 milligram. Then we have got 1.7, which is 24,280, and then we have got 2.4, which is also rightly priced, 26,015. So it is priced very smartly right in the beginning, so that patients can start and they can escalate without having a hole in their pocket.
Hole in the pocket. I like the way, Hiral, that Agni started that story as well. He said, you can become 20% lighter if you are rich.
Rich, I know. I mean, 26,000 is on the higher side if you have to look at the price band, because I was just looking at the other rates. Mounjaro is 14 to 17,000 is the range. You're talking about, the problem with Wegovy was the range that we were expecting earlier was somewhere in that 17,000 kind of a bracket. That's what this is
for a month's dose?
Almost a month's dose is what you're looking at.
So just look at what people pay for a nutritionist, a gym, and all kinds of weight loss cures. So I think
but the cheapest of the lot is going to be a Lira Fit, because I mean, we've assumed a 1.2 mg for a Lira Fit, which is a Glenmark product, is around 5,200. And if you take that into consideration, we've assumed 100 rupees per 1.2 mg, what they had quoted earlier. So for a month, 5,500, 6,000 is the calculation that it comes up to. So I think Glenmark will be the one which is the cheapest.
It's not even a basic gym membership in Bombay City, which, you still have to go to the gym after taking this. Yes. By the way, if you've done research on it, it's not just that you take this and then, you sit.
Yeah, but there are some bit of side effects as well for non-diabetes people. So I think that's something that
No, these are prescription drugs. These are prescription drugs, so that we have to make clear. But, having said that, it's the hottest trend in the pharmaceutical space, and a company is always looked at with where they are in the pipeline. So, just want to take that detail as well from G. Chokhalingam. What are you making of this entire trend, and are you tracking the companies which seem to be ahead of it?
No, sorry, I do not track. I would prefer, save money and not eat extra food to reduce the weight rather than spending money to eat these kind of ingredients.
Okay, that's wise words there. I mean, I was talking about the stocks, but nevertheless, good to know a view on this. Milan, any comments on the stock price, the product, the trend, anything at all?
Ma'am, not really. I'm not tracking the space.
Okay. So he's not tracking the space either. Some of the key companies which are on top of this game, Dr. Reddy's is one of them. Biocon is another. There are quite a few companies that are ahead in this race for an affordable obesity solution. And what's interesting is no one any longer is even pretending it's only a diabetic drug.
Yeah, I mean,
it's very
so
clear.
I think the only one change that comes in over here is where you have Wegovy, who's clearly saying between Wegovy and Ozempic, one of them, they've categorically said it is for to treat type 2 diabetes, and the other one is in terms of weight management. So there are a few over there, but I mean, this is a developing market and lots more to come in this space. But on the charts, very quickly, Milan, if you could just tell us between a Glenmark, Biocon, Dr. Reddy's, where are you seeing strength right now?
Wait a moment. I'm more strength in Dr. Reddy and Glenmark. Both are quite well placed on charts, and both are well placed to generate alpha over the coming weeks. Glenmark and Dr. Reddy.
Topics coming in with regards to from the pharma pack, Tamanna, but I think the hot story now is whether train travel is going to get as expensive as we were seeing in terms of the Olas and Ubers.
Yeah, no, I'm finding it astonishing that train prices have gone up, and it's the need of the hour actually for that entire sector. It's going to get more expensive. Sources have told NDTV that Indian Railways is set to implement a new revised fare structure as early as July 1st. My colleague Pallav Mishra joins in for more details. Pallav, क्या details मिल रही हैं?
देखिए, जो सूत्र है उनका ये कहना है कि 1 जुलाई से जो भारतीय रेलवे है वो किराए में बढ़ोतरी कर सकती है, लेकिन जो ये बढ़ोतरी है वो मेल और एक्सप्रेस की जो ट्रेन है उसमें सेकंड क्लास जो है और जो नॉन एसी है जो और एसी है उसमें बढ़ोतरी करने का जो है वो प्लानिंग चल रही है। जो एसी कोचेस है उसमें अब आपको पर किलोमीटर 2 पैसे की बढ़ोतरी की जाएगी। जो नॉन एसी कोचेस है उसमें पर किलोमीटर 1 पैसे की बढ़ोतरी की जाएगी, और जो सेकंड क्लास है जो है उसमें 500 किलोमीटर से अगर आप अधिक की यात्रा करेंगे तो आपको आधे पैसे अधिक पर किलोमीटर की जो है बढ़ोतरी की जाएगी। हालांकि जो नया जो रेट होगा वो जो जिनका मंथली पास बनता है या जो सब अर्बन लोकल ट्रेन होती हैं, जो लोकल ट्रेन होती हैं उसमें कोई भी प्राइस बढ़ोतरी की कोई भी प्लानिंग नहीं है। लेकिन जो मेल और एक्सप्रेस ट्रेन है, खासकर जो एसी जो लोग यात्रा करते हैं नॉन एसी में, उनको लेकर ये भारतीय रेलवे प्लानिंग कर रही है कि जुलाई के पहली तारीख से जो है किराए को बढ़ोतरी की जाए, क्योंकि लंबे समय से इसको लेकर बातचीत हो रही थी। और आपको याद होगा कि जब पिछला संसद का सत्र था उस दौरान जो है रेल मंत्री अश्विनी वैष्णव ने भी इस बात का जिक्र किया था कि फिलहाल जो भारतीय रेलवे है वो सबसे कम किराया जो है वो लोगों से ले रही है, और आने वाले समय में ये संकेत दिए जा रहे थे कि भारतीय रेलवे जो है इसको विचार करके जो है रेल की यात्राओं में जो पैसे बढ़ोतरी है उसमें कुछ कर सकती है। और उसी को लेकर सूत्रों का कहना है कि 1 जुलाई से नया जो किराया है वो लागू हो सकता है।
Okay, so we might see a new fare from the 1st of July. Thank you so much for that, Pallav. All right, time for the BTST call. Milan, we started out very, very hot. Seeming to end, with not as much excitement. But what's the call tomorrow?
I would still be looking at the auto space. My BTST call would be TVS Motor. It could be bought at current levels with a target of 2,900 and stop loss of 2,775.
Okay, so one call on TVS Motors. And just trying to understand what would be would you build a position on the Nifty or the Bank Nifty at this point as we're so close to the closing of trade?
No, I would not. The reason is that so long as it's trading below 25,100, it is expected to stay in a range. I would rather prefer a directional position in Nifty on the upside once the expiry is out of the way.
Once the expiry is out of the way will be the key one to watch.
Yes, these are interesting names. In fact, we are almost at the day's lowest levels, Tamanna, but what is positive is that probably markets will end above that 25,000 mark, right?
Yeah.
I think, and that's the cue that traders and investors should be picking up. But Enviro Infra, let's quickly pull up that stock on the screens. It's making a significant push into the renewable energy sector. The stock is up 11%, and this is complementing a slew of new orders in its core water treatment business. Vansh is standing by to give us more details. Vansh, stock up at 10 to 11%. What is it that is so positive in terms of the order?
Right, so the company has won new projects worth approximately 306 crores in the domestic market. They have basically secured EPC contracts of multiple sewage treatment plants. The contract also includes 15 years of operation and maintenance services. The plants will have capacities ranging from 2 million liters per day to 33 million liters per day. They have also forayed into renewables with the acquisition of 69 megawatt solar power projects. Firstly, they have acquired Vento Power, which has received a LOI for a 40 megawatt solar project in Odisha from PTC India. The cost of acquisition for the project is approximately 150 odd crores. Secondly, they have acquired Soltrix Energy. 49% stake has been acquired. The company has been awarded 29 megawatt solar power project by the government of Maharashtra. So this is what the overall picture is looking for Enviro Infra.
That's Enviro Infra. Mr. Chokalingam, how are you looking at Enviro Infra? And if you have to look at other companies as well from the water treatment space, they have been a downer. Even the performance in the last couple of trading sessions has been leaked. For example, EMS, Enviro, you have Iron Exchange, all of them not really doing well. How would you look at all of these companies? Because it's down almost around 20 to 35% in the last 6 months.
Yeah, Enviro Infra I studied recently. It looked very good at current price. A strong balance sheet and solid growth in the last 2-3 years, and valuation is also comfortable around 2021. So this is a good buy, I believe, at the current price.
Okay, Milan, very quickly, EMS, Enviro, Josh Engineering, Denta Water, taking the downtick into consideration in the last 6 months, any buying opportunities that you're seeing?
Yes, I am seeing opportunities in Josh and Enviro. Because Josh Engineering has successfully defended the 200 DMA and has shown initial signs of a base formation. So Josh and Enviro would be something I would prefer to take a look at.
Okay, so Josh and Enviro, two counters that are strong in trade. Moving on, you have a Garware. That Garware Tech has seen some smart moves as well. Now, the question is, the valuations are expensive on this counter, whereas the growth is slightly slow. They're looking to grow the bottom line in that range of around 15 to 20% per year. They have been slightly cautious with regards to the top line growth goes, and they're expecting the top line in low double digits. The stock is up around 6% in trade. Milan, what are charts indicating with the Garware Tech as well?
Well, the Garware Fibers, Garware Tech, the stock made its high around between 940 and 950 sometime in the end of November last year. And since then, it's been trading in a very broad trading range. Right now, the stock has seen an uptick, but I see that the upsides will stay kept. And fresh set of sustainable up move should take place only above 950 odd levels and not before that. So my suggestion for anyone would be to get little aggressive on Garware only after it goes above 950. As of now, I see the upsides staying kept between 940 and 950 odd levels.
Okay, all right. Garware Tech surviving through the day actually, despite the weakness we saw in the markets. G. Chokalingam, Milan, thank you so much for speaking with us on India Market Close. Just less than a minute to go. Well, we're closing the day. I mean, we started with a bang and closing with a whimper. is what I would say. Nevertheless, 0.5% up on the Nifty is not quite bad. Not the kind of celebration that you would imagine you would see. Ceasefire, Iran, Israel desisting from war. A lot of problems that, seem to exist are coming off. Nevertheless, you are looking like you're going to close below the 25,100 mark, and that tells you that you're probably going to see a range tomorrow as well, range bound trade tomorrow as well. We've stayed above 25,000 and that's good enough. You should pull up the intraday of the Nifty actually. It'll give you a sense of how volatile the day has continued to be. I mean, you hit a high of 25,300. You could clearly not sustain it in this market. Went as low as 24,999. So you're looking at a 300 plus point range just through one trading session, which is why even if you're closing in the positive, it's not the best kind of close that you would have expected. Let's pull up the heat map for you and see what's won and what's not when it comes to the Nifty, and then of course we'll get down the road. ONGC, this was a no-brainer because crude has come off some 7% overnight because of the ceasefire that's been announced. ONGC bound to suffer. Remember, ONGC was flying high when crude prices were going up. So the reverse trade there, 3% down. Power grid also languishing to some extent. There was a block deal in NTPC, but NTPC has actually recovered from the lows of the day. Reports of more trouble brewing in IndusInd. A news report claiming that the microfinance book may have more trouble going ahead. IndusInd Bank taking a bit of a knock as well. BEL, along with the rest of the defense pack, having a tough day. But the winners is where the story is. Irani ports right on top. Again, the ceasefire giving some relief to concerns that the Haifa port would be very, very vulnerable. So that's good news there. Jio Finance, Shriram Finance, all of those doing well. Some steel stocks also being thrown in. Dr. Reddy's very, very decent in trade today. Kotak Mahindra Bank also not half bad. It's been a good day for the Adani Group stocks actually. Adani and Adani Ports. Let's see if we can pull up Adani Total, some of the other group companies. So you've seen a lot of buzz over there on all of those stocks, and that would be great to pull up right now. But nevertheless, here in the broader markets is also where you've seen quite a bit of action.
Yeah, in fact, the broader markets were pretty much outperforming, and there is a cooling effect come in there as well. We have ended in the positive. We were up around 1.6, 1.7%. You have the broader markets with gains of around 0.8% in terms of small cap as well as the mid cap index. VIX is also important because that has cooled off slightly. There you go, 3.5% downtick, 13.5, which is a very interesting level where, there is some bit of comfort that, investors have as well from a market perspective. Let's quickly pull up BSE 500 because you'll see the kind of action that you've seen in terms of stocks. GM Financial, a lot of buzz happening on that front. Again, it's the non-NP, the NPA asset portfolio. That probably is what the street is looking at as to how they deal with it, right?
You would have heard it first on Heard on the Street.
So that's going to be one stock that we should be watching out for. KRBL, good recovery coming in there, but that's mainly because, again, on the back of the ceasefire, exports with regards to Iran would probably pick up, and that's the reason why you're seeing that kind of gains. Garware Technical, Kajaria Cements, Delivery, Capri Global. Vodafone Idea is also an interesting one that we've been watching out for with the government already on this NDTV exclusive, where we did report that the AGR dues is under consideration and Vodafone is going to be treated separately, which Srimi brought to us. So that stock has been in focus as well. And you have KPIT, Mishra Dhatu, Oil India. So, it's not a particular trend that you're seeing, but all the sectors from the broader markets have seen a good reaction. Z Entertainment, after that smart up move yesterday, did see a downtick. Sectors, again, defense, major downer, oil and gas, major downer, but we had the PSU Bank Index, metals. And if you talk about the private banking space, which clearly outperformed Tamanna.
Yeah. So India Defence again is a reverse trade that you're seeing. PSU Banks is fine. Let's look quickly at some of the factors that we need to watch out for tomorrow. There's going to be a testimony from Fed Chairman Powell, so important to see what he says there. Shares which will exit Anchor Lock-in, Bellrise Industries, 4% of it goes up. And I would also add 2 IPOs opening tomorrow for subscription. And
Sambhav Steel and HBD, and HBD is the larger one that we
is the big one, So, watch out for that because a lot of liquidity getting sucked out of the market. That's probably the reason you've seen some pressure today as well. People are shoring up cash reserves to put in some of these primary market lots. So it'll eventually come back in, but that could be one of the reasons as well. But nevertheless, it's not a bad close at all. Not the kind of fireworks one would have hoped for, but we're closing in the positive. With that, that's all the time we have on India Market Close. From Hiral, me and the team that put the show together, thank you so much for watching.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Top sources. Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahogra. Now let's get straight to the show, viewers. Markets today closed in the red, with Nifty 50 closing below the 25,800 levels. Meanwhile, the Sensex also declined 500 points. Infosys, L&T, Hero MotoCorp, M&M, HCL Tech were the top losers from within the Nifty 50 pack. Now, sectorally, if we look at PSU Bank and metals were the top gainers. Autos and consumptions also managed to, gain out, to make out gains there. And on the flip side, media and defense were also, on the back foot. Adani Group founder and chairman Gautam Adani addressed investors at the annual general meeting held today. While outlining the group's achievements in the past fiscal, he assured investors that though the road had been rough, the group has emerged victorious through it all and in all its trials. Chairman Gautam Adani also said, and I quote, "From Trump's tariffs to economic slowdowns of various large economies, the past year has been one of the most turbulent and full of uncertainty. But despite all these headwinds, the Adani Group created history." Gautam Adani also laid out the group's plan for the next 5 years, annual capital expenditure of $15 to $20 billion and the group's plan towards helping society. Adani Airports Holdings has secured $1 billion in financing for Mumbai International Airport, marking India's first investment-grade private bond issuance in the airport sector. The deal also includes $750 million in notes maturing in July 2029, with an option to raise an additional $250 million.
which is led by Apollo Managed Funds. The transaction drew participation from global investors like BlackRock and Standard Chartered. Now, the funds will support MIAL's modernization, capacity expansion and sustainability goals, including a net zero emission target by 2029. Oil prices hit their lowest in 2 weeks after Israel agreed to US President Donald Trump's proposal for a ceasefire with Iran, alleviating worries of supply disruptions in the Middle East, a major oil-producing region. Brent crude hovered close to $67 per barrel, while US WTI was also 5.5% down at close to $65 per barrel. President Donald Trump urged US energy producers to drill, baby, drill, warning of a possible oil price spike as tensions with Iran threaten to spark a broader Middle East conflict. Now, but the shale industry has responded with a collective shrug, holding off new drillings as it battles for, falling prices, high costs and investor pressure. Gold prices fell more than 1% to a near 2-week low as risk appetite improved after a ceasefire came into effect to end a 12-day war between Iran and Israel, denting demand for safe haven assets. Spot gold was down 1.4% at $3,319.84 an ounce. India's defense sector is off to a strong FY26 start, with capex surging 122% year-on-year in April, following a 25% year-on-year rise in March of 2025. Jefferies notes the government's post-Operation Sindoor push to boost exports of India-made defense equipment, with year-to-date exports already at 10% of the 30,000 crore target. While PSUs remain dominant, private sector participation is also steadily rising. HAL and Data Patterns are Jefferies' top picks, with BEL also favored. JP Morgan reiterates its overweight rating on Bharat Electronics, raising the target price to 490 rupees. The brokerage highlights steady order inflows and rising geopolitical tensions as key drivers of potential outperformance. Now, BEL is also positioned to benefit from the upcoming emergency procurement deals and remains a contender for large-scale contracts in the medium term. Margins are expected to remain resilient, bolstered by its diversified portfolio. The company's exposure to civilian and export markets is seen as an additional growth lever. Analysts believe that this broad-based strength should support consistent long-term performance. JP Morgan maintains an overweight rating on KPIT Tech with a target price of 1,500 rupees, but cites a disappointing mid-quarter update due to slow deal conversions, cutting earnings estimates by 2 to 3% on lower margins and interest income. Meanwhile, Goldman Sachs holds a neutral stance with a 1,280 rupee target, noting the hybrid versus EV debate isn't currently impacting KPIT's opportunities. Now, let's also take a closer look at the KPIT Tech that was tanking in trade. The company is grappling with a challenging global environment driven by ongoing wars and tariffs, clouding its outlook. While the company has a robust deal pipeline, conversions are sluggish as new projects replace older revenues amid this tight client budgets. Now, going forward, the company plans to bolster margins but warns of no one-time gains in Q1 of FY26 compared to Q4 of FY25. Paras Defense and Space Technologies is poised for strong growth, with the company's directors seeing a robust order book exceeding 900 crore rupees and projecting over 40% growth moving forward. Now, Mahajan also highlights the critical role of unmanned aerial vehicles in modern warfare, proving their impact in conflicts like Operation Sindoor. He also emphasizes anti-drone systems as the defense mechanism of the future, with Paras solutions already deployed in sensitive areas. Faced with criticism over slow delivery of aircraft, defense giant Hindustan Aeronautics Limited explained that the issue is expected to be sorted out this year. He explained that the delay in aircraft delivery was due to the delay in engines for the Tejas from GE. Now, the stock was also down over 2% in trade today after there was a cool off in the defense rally. Macquarie maintains a bullish view on key cement stocks, citing improved demand momentum and pricing power in the sector. Now, Ultratech and Ambuja remain in outperform territory, while Dalmia also sees a target hike. Shree Cement stays neutral and ACC sees a slight target cut. Ramco is also rated underperform despite raised, the target price. Now, the firm also expects rising prices from H2 of FY25 lows and strong volume growth to lift the earnings. Analysts favor players with a wide regional presence and sharp cost management. Novo Nordisk has launched its blockbuster weight loss drug Wegovy in India, targeting the country's growing obesity crisis. Now, the GLP-1 based injectable, already a global success, arrives amid surging demand and rising competition from Eli Lilly's Mounjaro. Now, with the semaglutide's patent set to expire in 2026, Indian pharma giants are gearing up with generics. Despite high prices, Wegovy's potential to reshape obesity and diabetes care in India is significant. Metro Brands has signed a long-term exclusive distribution agreement with British footwear brand Clarks, marking the latter's official return to the Indian market. Now, under this deal, Metro will manage both online and offline sales of Clarks products across India and neighboring countries as well, including Nepal, Bhutan, Bangladesh, Maldives and Sri Lanka. The partnership includes oversight of Clarks' e-commerce operations and mono-brand stores. This move also strengthens Metro's premium portfolio and expands Clarks' regional footprint. Goldman Sachs has initiated coverage on Page Industries with a buy rating and a target price of 52,000 rupees, citing a strong recovery outlook. Now, 5,200, I beg your pardon. The company is poised to return to sustainable mid-teen growth following prolonged disruption, a reset in channel inventory, and a rebound in the outerwear segment. Driven by EBO expansion and trend-led launches are expected to support momentum. Analysts highlights improving market conditions and a renewed focus on execution. CLSA has initiated coverage on Nykaa with an outperform rating and a target price of 229 rupees, citing its leadership in India's fast-growing beauty segment. The brokerage see Nykaa's omni-channel model and strong brand equity as key strengths despite challenges in its fashion vertical. CLSA expects steady profitability gains, projecting a 310 basis points EBITDA margin expansion by FY of 28. The firm believes that Nykaa is well positioned to benefit from the rising consumer aspirations and digital adoption. Swan Energy teams up with Balu Forge in a strategic joint venture to explore cutting-edge opportunities in defense, aerospace, railways and nuclear sectors. The JV Swan Balu Heavy Industries was incorporated in April of 2025, with Swan Energy subscribing to 60,000 equity shares, securing a 60% stake, while Balu Forge holds the remaining 40%. Now, this partnership actually aims to develop and supply specialized products and solutions tailored for high growth and high impact industries. Tata Motors is intensifying the EV battle, announcing the introductory pricing for its much-awaited Harrier EV. The four-wheeler sport utility vehicle will have its ex-showroom prices starting from 21.49 lakh rupees, according to the company. Bookings for the vehicle will open from July 2nd and with an option to register interest at the company's website. Finance Minister Nirmala Sitharaman has asked top income tax officials to speed up the clearing of pending tax appeals. Out of 5.77 lakh cases, the goal is to resolve 2.25 lakh this financial year, covering over 10 lakh crore rupees in disputed taxes. She also urged the department to actually issue refunds faster, fix taxpayer complaints quickly and follow a taxpayer-first approach to build trust and improve service. E-commerce giant Amazon is gearing up for its Prime Day sale from July 8 to 11 with a strong focus on speedy deliveries. Now, the company's goal is to make this the fastest Prime Day ever, with many items arriving in just hours or on the same day or next day. The online shopping platform also expects to see a big increase in Prime subscriptions, especially from Tier 2 and Tier 3 cities. The 119 crore IPO of Globe Civil Projects garners robust interest on day one, getting fully subscribed within just 90 minutes. The New Delhi-based EPC firm receives order worth 1.21 crore bids against 1.17 crore shares on offer by 11:30 a.m. this morning. Now, strong participation from retail and non-institutional investors drives early momentum. Retail bids are subscribed 1.43 times and NII bids 1.5 times within the first hour. However, qualified institutional buyers are yet to make a significant move. The public issue runs from June 24 to 26 at a price range of 67 to 71 rupee per share. Kalpataru is set to launch its IPO on June 24, offering investors an opportunity to invest in one of Maharashtra's leading real estate developers. The company manages end-to-end real estate functions, including land acquisition, design, execution, and marketing. With a stronghold in the Mumbai metropolitan region, Kalpataru operates across all its micro markets. As of December 31, the developer has completed 120 projects covering over 25.87 million square feet. The firm also has a presence in cities like Hyderabad, Indore, Bengaluru, and Jodhpur. The IPO aims to fund growth and strengthen its position in its key urban markets. The 852 crore IPO of Bari Industrial Gases opens to a tepid response with just 3% subscription as of midday on June 24. The Kolkata-based gases manufacturer receives bids for 5.17 lakh shares against the offer size of 1.51 crore rupees. Retail investors subscribe to 6% of their portion, while NIIs pick up just 1%. There is no significant interest yet from the qualified institutional buyers. The issue includes a 400 crore fresh share sale and a 452.53 crore offer for sale. The IPO also remains open until June 26, with the price band set at 380 to 400 rupee per share. HDB Financial Services opens its 12,500 crore IPO for subscription on June 25th, marking the biggest NBFC public offering of the year. The IPO comprises a 2,500 crore fresh issue and 10,000 crore offer for sale by promoter HDFC Bank. HDFC Bank currently holds over 94% stake in the company. The price band is set between 700 to 740 per share, though the grey market premium shows an 11% uptick. However, it still trails earlier unlisted market highs of 1,250 rupees, raising concerns for pre-IPO investors. Proceeds from the fresh issue are earmarked for expansion and operational growth. Shares of Bajaj Consumer Care surged 19% intraday, hitting a new high after the company announced a major leadership shakeup. Naveen Pandey has been appointed managing director for 5 years effective July 1st. He brings over 20 years of leadership experience to the table. This follows Jaideep Nandi's tenure as MD on June 30th. Trading volume soared to 37 times, with 30-day average reflecting investor enthusiasm for the new leadership. Prime Minister Narendra Modi said Operation Sindoor showed the world that India takes a tough stand against terrorism. Speaking at an event marking 100 years since the meeting between Sri Narayan Guru and Mahatma Gandhi, he said that India has proven that no place is safe for those who harm its people. He added that India is becoming more self-reliant in defense, with Made in India weapons playing a key role in the operation, and soon these weapons will be recognized globally. Rising tensions in the Middle East have forced Indian airlines to cancel or reroute many flights. Union Minister Ram Mohan Naidu stated today the Ministry of Civil Aviation is actively monitoring the situation and collaborating with airlines for real-time updates. So far, 48 flights to and from Delhi airport have been cancelled due to airspace closures. Now, this includes 17 Air India flights, 8 Indigo flights, and 3 from other airlines. The monsoon is also making a significant progress, with the IMD announcing its anticipated arrival in Delhi and Uttar Pradesh within the next 36 hours. The southwest monsoon is also expected to advance into Rajasthan, Punjab and Haryana in the same time frame. Looking ahead, northeast India as well as parts of central and east India are set to experience very heavy rainfall over the next 7 days. US President Donald Trump announced a ceasefire between Israel and Iran effective just after midnight, ending a 12-day conflict. Trump brokered the deal with Israeli PM Benjamin Netanyahu while Qatar facilitated Iran's agreement. Israel confirmed compliance but reported Iranian missiles strikes in Beersheba, killing, forecasting doubt on the ceasefire stability. Iran denies violating terms. Global markets rallied with oil prices dropping 5% as supply disruption fears eased. Trump urged both the nations to maintain peace, calling it a historic step toward ending the 12-day war. Now, just hours after the US president announced a ceasefire, Iran launched a limited missile strike. Now, the attack was in response to recent American airstrikes on Iran's nuclear sites. However, the ceasefire remained uncertain as Iran also fired missiles at Israel, hitting the city of Beersheba. Israeli firefighters later recovered 4 bodies from a damaged building. After several delays, NASA has announced that Indian astronaut group captain Shubhanshu Shukla might finally fly into space tomorrow on June 25th. Now, this new target date, the 6th one set by NASA, is the quickest turnaround time for a launch announcement. The Axiom Mission 4 is scheduled to lift off at 12:01 p.m. IST from NASA's Kennedy Space Center in Florida. Updates from Club World Cup. Manchester City crushed all in 6/0 with Gundogan scoring twice. Meanwhile, RB Salzburg and Al Hilal played out a scoreless draw, and Monterrey held River Plate to a 0-0 stalemate. The group stage is in full swing. Dilip Doshi, the former Indian left-arm spinner, has sadly passed away in London at the age of 77. The BCCI shared their condolences, stating that the BCCI mourns the sad demise of former India spinner Dilip Doshi. May his soul rest in peace. Doshi represented India in 33 tests and 15 one-day internationals between 1979 and 1983, earning renowned for his classic spin bowling. Diljit Dosanjh, the Punjabi pop icon, is officially going from stadiums to study material. Toronto Metropolitan University in Canada has announced a course dedicated to the singer-songwriter, set to launch in late 2026. The course will be offered through the Creative School, and Dr. Charlie Wall Andrews from TMU said that his rise illustrates the cultural influence and economic potential of Punjabi music globally. The announcement comes just hours before Dosanjh's latest film Sardarji 3 found itself in the middle of a controversy with a cancelled India release over its casting of Pakistani star Hania Amir. Now, with that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit, and Sanjana Chauhan will be joining us shortly after the break with Profit 360.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true. And today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top.
Benchmarks end higher but lag behind small and mid-cap indices, with the Nifty closing nearly 300 points below its intraday high and the Sensex slipping 1,000 points from the top. All sectoral indices finish in the green except media, defense and oil and gas. Defying the odds to achieve record revenue and playing a key role in Operation Sindoor with their drones, the Adani Group is set to forge new paths. Chairman Gautam Adani announces an annual capex of $15 to $20 billion over the next 5 years. Adani Airport secures $1 billion funding from global investors for the Mumbai International Airport, issuing $750 million notes maturing July 2029 and raising an additional $250 million. Vodafone Idea, facing severe financial stress, may get relief as the government says and considers measures like a moratorium on AGR dues and fresh bank credit, aiming to prevent a sector duopoly and ensure the telco's survival. Kuwait, Iraq, the UAE and Qatar reopened their airspaces following the US brokered ceasefire between Iran and Israel, which ended 12 days of intense conflict marked by missile barrages and airstrikes. Despite the truce, Bahrain has kept its airspace closed, signaling continued caution as the situation remains fragile. Novo Nordisk launches the first and only weight management medication in India, Wegovy, an injectable semaglutide. It will be available in 5 dosing strengths and pricing starts from 17,300 rupees. IPOs of Kalpataru, Ellen Barry Industrial Gases and Globe Civil Projects open today. Investors can subscribe until June the 26th as these companies raise significant capital across real estate, industrial gases and EPC sectors.